Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on November 2nd, 2020 for a weekly Forex market analysis for the 2nd through the 6th. And we are going to just pull up our disclaimer real quick to remind you this webinar is for illustrative and informational purposes only. And with that, we're going to jump to our live screen. We have the Forex-Trading-Unlocked.com website already pulled up. We have the workstation page already here, and let's just go over, besides the fact that we know we have the U.S. elections tomorrow, we have ISM number coming out later on today that is up against the U.S. dollar. As far as other numbers, we have durable goods and factory orders also coming out tomorrow on election day for the U.S. We have unemployment for Australia, retail sales. For the UK, we have reserve assets on Wednesday, Thursday, and let's see, we have productivity and a couple of ADP, a couple other numbers coming out on Thursday. Obviously, the employment claims, initial claims. We have the ISM number as well. Then we also have, let's see, what else we have? Retail sales for the EU coming up later on in the week. We have a Bank of England meeting going on also at the end of the week. And let's see, then we get to Friday, which has us with, let's see, a bunch of Canadian numbers, Canadian dollar numbers, and then we obviously have the unemployment numbers for the US and PMI for Canada as well. So a lot of Canadian and US numbers coming out on Friday. Here we have the Euro US dollar, which is in a kind of a tight range, which I would expect the next 2 days in front of the US elections for a lot of not instability, but just going nowhere kind of trading. What I would do is key off of the low set back here in September. This was our key directional level right now, holding up this sideways trade. Any failure from here has the bears back on edge as they try to pound support some more. Now remember, we had this head and shoulders that it's initiated this initial break into September. We got a nice little bounce into October. We fell off this a week and a half ago, and we also had this bearish engulfing line sell signal that had occurred. Okay, there we go. Right here, that's this red line right here. I'll make this a little bit easier to see. Okay, so on this date here, we had this sell signal. We'd already came into our target zone. However, it doesn't mean that it's not going to continue to trend lower. So right now, as we head into the election, I would use a lot of caution and expecting this trade right here over kind of a choppy trade and hanging out in this range right here. So we're going to have to get through the election, see who wins, Biden or Trump. Most likely, what we're going to pen in here is there's two possible scenarios. We have one going this way, and then we have one going this way. Okay, so who gets it and what does it mean? So if we have a Biden win, that's good for the rest of the world, as globalism will be back on the table in the United States, and we will have less protectionist ideas going for the United States moving forward, because Biden already said he's overturning everything that was done in the past 3 years economically and on a tax basis. So this is going to affect the dollar in a very, very big way. Now obviously anything can happen. The market's going to go up, it's going to go down, but overall consensus and dollar weakness will continue to prevail under a Biden win and a Biden presidency. A Trump win would be most likely supportive of the dollar. The dollar has been the strongest it's been in decades, and as far as when it comes to the economy, without any of U.S. political intervention or economic intervention, meaning that while the Fed's been doing its policy of keeping rates low and all kinds of other things, even though inflation's been at bay as well, the dollar has been able to remain strong, especially over the past few years. Now with the inkling of a Biden win, which is priced in the markets already, this is why we're seeing the market where it's at right now. And I think going into the election, we're going to stay stable. The whole world's going into coronavirus lockdowns and what have you. They're expecting all kinds of violence, not just here, but it's also heating up in Europe as these lockdowns continue. So we'll see what happens with the markets as we move forward with this. It's going to be interesting. I would not expect very much going on today or even tomorrow, so be careful of algo spikes. If you're not already short in this move right here and keeping your stops tight, I would say use caution about entering into a new trade until after tomorrow is over. I would say basically Wednesday is when the trading is going to really begin. Until then, we're not expecting very much reaction going on here. We already hit our sell signal. We're still bearish, and we came off a higher move high, and now we've made a lower move low in the short run, meaning neutral to bearish. In longer term, we made this lower move low, lower move high, and if we fail here at this yellow line at $1.1602, well then that pretty much confirms a bearish market, and even if Biden wins, that is a technical thing. So this is just a fundamental here with Biden win and Trump win for the longer term outlook for the dollar. Now let's look at the British pound US dollar, which is the second biggest component of the dollar index, only second to the euro. As you can see, this market has been lower today. It's slightly positive. It's in a similar way as well. It came off a higher move high, and then it touched down this lower move low today actually. So this is significant. This confirms our neutral bias. I would say that only a breakout above this recent high. And now, let's see, we can go back to this low here. Okay, so we already took out this one, this low right here. We did that today, but we're not trading below it. So we're going to use this as our marker for up and for down. This is our breakout point for either way, to the upside or downside. Right now we have the longer term trend, which is neutral to lower for the pound. And I think that especially with the fundamentals between Brexit finishing up over the next 2 months, the coronavirus lockdowns, etc., I find it very hard to believe that the pound is going to be able to gain very much strength versus the dollar. However, once again, this will be the same type of thing where if we get a Biden win, this is now more for the EU and for the euro than for the pound. The dollar will be weaker versus most likely versus the pound. If Trump is reelected, this is a little bit difficult because this is still most likely going to be stronger for the dollar to make trade negotiations still before the end of the year. So it could get choppy, but overall we're looking for dollar strength to come into the market. And if you think about it, besides the fact that we're making lower move lows and lower move highs on a more intermediate term, we fell through this upward sloping support band right here. So besides doing that and then touching off this low right here today, I think that it's very, very critical that you notice that these are signs of weakness here. Okay, so right here, this little area here, the fact that we penetrated that is a very good indication that the pound US dollar is going to continue to go lower. Now let's look at the US dollar CHF. So as far as the European currencies are balancing out, look at this one. US dollar is rallying strong today. Flight to quality is the US dollar, the Swiss, and the yen. Right now the Swiss is not flight to quality. We have a dollar rally that's going on here. We had this breakout already last week. It was confirmed. This is a very, very strong momentum here. We had a reverse head and shoulders just in this market, just like we did in the euro. However, when we had this extreme, we came back high in October, and now look at what we're doing. So as we head into the election, this is a positive sign right here for US dollar strength. As a overall against the European currencies, probably because of the lockdowns, and especially because now we have terror threats rising in both France and Germany after multiple attacks in both countries over the past weekend and the past week. There's a lot of growing dissension amongst the Muslim the contingency that has been building in Europe that's basically being held there, not held there against their will. They're there because they want to be. They fled their countries, but there's really not. They're in their own little zones, and they're not happy with the lockdown measures because of the recent attacks in Paris and throughout France and then throughout Germany and even in the UK. This is probably going to continue to fuel instability. I think that especially no matter who wins the U.S. election, that's irrelevant, but especially under a Biden win, I would assume that you're going to see tremendous amounts of more of this kind of negative, just not even geopolitical, but a negative environment going on in the EU. It's going to be hard to contain lockdowns when you have civil unrest brewing at the same time. So that's probably what's going on with this marker here, with this rally. This is a key indicator for what's going on in Europe. I would pay attention to this. This is a key little indicator. Remember, the best indicator of where the markets are going are the markets themselves. And especially with the currencies, that's the beautiful thing, is you can do that much more readily than you can with, say, stocks and many futures and things like that. So key breakout right here occurring today. As long as this bullish strength remains in place, I would say that this is going to be the confirmation of where the trend is going. The same thing goes here as far as a Biden win or a Trump win, as far as dollar strength, but this one's actually leaning on a Trump win. So I think this might have more to do with coronavirus and the insurgency of what's going on between the Muslims attacking Christians throughout Europe and things like that. So I believe until they get that under control, which guess what, that ain't happening anytime soon, I believe you're going to start to see a buildup of dollar strength here. So now let's go to the U.S. dollar Canada. Remember we said we have a bunch of Canadian and U.S. dollar numbers, economic numbers coming at the end of the week. Expect sideways, big sideways here. I would key off of the high from the other day as well as this low back here from a week and a half ago. This puts us in big sideways. Overall, this trend has been neutral to slightly higher over the past couple months. It's a grind. Like I said, this is probably going to be sideways going into the election. Once the election's over, this is another one where I think you're going to see the results fundamentally about what's going to happen versus Biden and Trump. So after the election, if we have a Biden win, then that's good for Canada. I would think that you will expect our restrictions and everything opening up with the Canadian border after February, after the inauguration. And then we have the opposite is true if Trump wins. If Trump wins, it's more the same. We already have our trade deals with Canada. They will not be overturned, and Trudeau will have to deal with it. Trudeau is also already having a lot of backlash from what's going on between the lockdowns and the trade, the cancellation of trade and tourism, and a couple other things that are starting to really impact the Canadian dollar. I believe once this election is over, we'll get the marker on that. So we'll see what happens, but until then, over the next couple days, I would expect big sideways. So as you can see, the dollar is very mixed in how it's trading today. It is stronger versus the euro, it's neutral to weaker versus the pound, it's stronger versus the Swiss, it's weaker versus the Canada. It's a mixed bag of goods today. A lot of divergence and a lot of, like I said, in front of the election, expect this noise to continue. We will have a much clearer picture come Wednesday for our midweek analysis because, like I said, going into this, it's not going to think of it like a Fed number to where everyone's waiting to see if they do or don't cut rates. Well, we know they're not raising rates for a very long time, at least a year, especially if Trump is president, even though the market is dictating higher rates already. So the U.S. dollar yen, on the other hand, this is the one where I would not expect very much strength no matter who wins. But let's use this. We have a short-term breakout level here to the upside, and we have this one to the downside. So U.S. dollar weakness prevails as U.S. dollar strength is starting to hold its own and remain in other currencies. This is just dichotomy. There's a divergence. Typically, when the U.S. dollar is strong in other currencies, it's weaker in the yen, and vice versa. This trend is still in place. So as far as what will happen on the election, well, the U.S. dollar, if Trump wins, then I think it's going to be still pretty much neutral versus the yen. the U.S. dollar versus if a Biden wins, I think you're going to see this continuation of this trend in a very, very big way. So we'll see how this thing shapes up right now until you have a breakout confirming newer move highs, higher move highs after lower move highs and lower move lows, which would take us off the neutral to bearish forecast. Now, the key thing to take into account is that this market made a low back in September of 104 even, and then it made a low here at 104.0 quarter just last week. It did not make another low. You could call this a double bottom. It's only off by a couple ticks. So if that's the case, especially since we have made this low, which is not a lower move low, if we take out this high at 105.072, plus we take out this downward sloping resistance line, that would be a neutral change in trend. Not necessarily bullish overall, but a short-term change in trend from bearish to neutral to slightly positive. We'll see how this shapes up over the next couple days. Australian dollar, US dollar are saying that there's no more coronavirus in Australia after they've had severe lockdowns. Well, maybe that's true. Now, here's something you can see is that today this market had made a lower move low after making lower move highs. This market has been in a bear market for a few months now. This most likely is due to the financial woes brought on by lockdowns, the economy, slowdown in China. China also put a kibosh on a lot of the materials that they received from Australia over the past couple of weeks, meaning the raw materials that they use for production. Could that be because production is slowing to that low of a pace in China? I think that is one variable on it. That also, by them cutting off Australia, it helps to put pressure on the U.S. government because they blame the United States for what the Chinese do, which is stupid, but that's just how things are. So I would expect that right now into the election, you'll probably see a bounce. A Biden win would be huge for Australia. So Australia, like I said, is a major all-in partner with China because that's where their goods, that's where their commodities go. Let's get rid of that one. Let's redo this one. Okay. So we have a Biden win. Expect a very big rally in the Australian dollar. A Biden win would secure things with China, open up the doors, reduce the tariffs, and increase our trade deficits. I mean, everything is going to be overturned. We're just following what he says he's going to do. So that would be a very big thing for China. It would hurt our manufacturing, but if our manufacturing suffers and China does well, that bodes well for Australia because they are a core producer of a lot of their, like I said, materials. So a Trump win would mean Australian dollar, US dollar will continue this trend lower just because of the fact that the trade policies are not going to change. He's going to remain firm with China. And then with us, and then like I said, with Biden, we know the opposite is true. Now, New Zealand dollar, US dollar is a little bit different of a case. It hasn't been beaten up as hard. New Zealand dollar, US dollar. Okay, so the New Zealand dollar, US dollar, as you can see, has been more neutral than bearish. It has, over the past week and a half, been bobbling, making higher move highs and higher move lows. There's been divergence when it comes to the Asian currencies. Now, the Australian dollar and the US and the New Zealand dollar were trading very much in tandem for most of what was going on this year. Now, as you can see, it's starting to confirm neutral, no longer bullish, but it's not necessarily a bearish thing yet. What I would do is key off of these levels. Now, like I said, they're not Australia. They didn't have quite the lockdowns imposed like Australia did. They didn't have the coronavirus problem as bad either, and they're also not the biggest trading partner with China. So with them, that stands to reason why we've had this divergence, meaning that the New Zealand dollar has been bullish versus the dollar over the past month and a half, while the Australian dollar has not. This one is another one where fundamentally the dollar is weaker weaker if Biden wins and stronger if Trump wins. I think that this neutrality you're seeing right now and this positive thing here is pricing in the Biden win because that's what the markets are doing. And we will find out what happens on Wednesday. So if Trump, the incumbent, turns out to win the election, then we know that we are going to have another 3 years at least of the same type of policies. To see Trump turn around on everything he's been doing for 3 years would be an ultimate surprise and shocker to everyone, but I don't see that happening whatsoever. So we have this big divergence in the Asian currencies versus how we have with the European currencies. Now let's go look at the US dollar TRY. The reason we're looking at this is look at this pound new highs. The elevation of this rally and the strength here shows, especially with what's going on in the Middle East, how these countries coming together to make peace accords with Israel, and the fact that in my whole lifetime we've never had this limited amount of strife in the Middle East. So you can say what you want for the political environment of the world, as chaotic as it is everywhere in the world, especially in the United States and in Europe, and brewing and escalating. Ironically, it is decreasing in the hotbed of the planet, which is always under, I mean, let's just be real. The Middle East is always making the news. It gets to the point where it actually doesn't, it's just noise in the background. In fact, it used to make oil move all the time. Now it doesn't make it move at all because it's just so commonplace. Now, if we were to have some big kind of strife that occurs now, that would be a big deal. The thing I think that's really keeping things at bay is the fact that Iran, at least if Biden wins, we know he's going to go back to the old Iran agreement, the Paris Accord, and all kinds of things. Expect the Middle East to flare up in a big way. If Trump wins, I think we're going to see a continuing of the peace accords going on throughout the Middle East, and hopefully for at least a year or two more sustain some level of order and, well, just not outright warfare. Now let's look at the U.S. dollar versus the Mexican peso. The U.S. dollar Mexican peso for a while was looking like it wanted to fall apart, but after making lower move lows last month, it is showing a neutral trade. Now we're trading right here around this 21 even to 21.5 pesos to the dollar. And this is pretty much a fair value in a normal environment. I think that this right now is pricing in the fact that Biden is going to be the next president. But we'll see. If Trump wins, I wouldn't doubt that you see that the U.S. dollar Mexican peso is going to rally back up again to probably 23 pesos to the dollar. That's just my own take on it. The fact that we have travel still being reduced and it's probably not going to come back on the table for a while, that's most likely going to drive that bull back. If Biden wins, then I would say you can see this, probably expect to see the U.S. dollar Mexican peso drop to about 18 to 17 pesos to the dollar over the course of a few months as they open up their borders and we start to go backwards on everything that's been done for the past 3 years. Now, this is not a political take. This is just what's been going on in America. The trend is your friend. If we reverse the actions that have been followed for the past 3 years, pushing 4 years, obviously we would get an opposite effect. So we'll see how this goes. We have one more day to get through this election. Let's look at the Euro US dollar, which, remember, this one was slightly in the negative, and it still is slightly in the negative. So as you can see right now, the dollar is a mixed bag of goods, but definitely not looking good versus some of your major currencies. So we have no questions on the chat that haven't been answered. So here or on the YouTube one or the Twitch one. Yep. So what we will do is now end the video. So we'll see what happens with the election tomorrow. It's going to be exciting to see what kind of crazy volatility the market brings. Remember, this is an event trade. If you're not already in some sort of option play or direct, stay out for the next couple days. There's no reason to be in the market whatsoever until Wednesday. So with that being said, I want to thank you very much. Remember, we showed you this little sell signal right here. Just to let you know, that's a bearish engulfing line sell signal. And if you want to learn how to trade bearish engulfing line sell signals, then what you need to do is read the book, High Probable Japanese Candlestick Patterns, available on Kindle and paperback version on Amazon.com. Through it, you can utilize the best buy and sell patterns used for over 400 years in the markets. It works in equity markets, Forex markets, options markets. Learn how to apply these signals and what time frames to use them in. Most people fail to use candlesticks prop while they think they don't work. So take a look at the book, read it. It's on Amazon in Kindle and paperback version once again. And always check us out at forex-trading-unlocked.com and like and subscribe to our YouTube channel so you know when our next video comes out as